Welcome to the first episode of the ETU Beginners Trader Bootcamp. And today's episode, to start off, we will be teaching you how to read a chart from scratch with no experience. So as you can see, you must have seen this before. This is a candlestick Japanese chart or Japanese candlestick chart. And you can see on here on TradingView, there are different types of options you can pick on how you want to view price. All this is different ways to view time and price on your chart. But what I recommend, I almost always will recommend you guys use the candles. Okay, almost everyone that trades uses candles. Why? Because I find it to be the most accurate. I tried some of this other stuff before. It gets too complex. Look at this. It looks too complicated. So for the rest of this boot camp, for y'all that are new, go to tradingview.com, sign up for a TradingView account because you're going to be using TradingView to mark out your charts, mark out your trades, do your trend analysis, and you can even take trades inside TradingView if you link it to your broker in the trading panel down below. Anyway, to start off, you are going to be selecting candles because that's what I'm going to be teaching you guys how to trade and how to use. So let's go over the basics of candles and how to read them. So to read a candle, every single candle has 4 components. There is the high. Let me add the text here. There's the high of the candle. There's the low of the candle. There is also the opening price of the candle. And there's the closing price of the candle. So this is what your typical, in this situation, this is called bearish. So red is bearish. When we say bearish in trading, that means down. That means the market is moving down. When we see a green candle, that means bullish. That means the market is moving up. If you want to be able to determine if we're moving up or down very easily, are we moving to the bottom right of your screen or top right of your screen? If you're moving to the bottom right of your screen, we're bearish. If you're moving to the top right of your screen, we're bullish. The most simplistic way to identify trend in trading. This is a bearish candle, this is a bullish candle. Now for me, the color of the candle does actually matter when we later go into like talking about my strategy I trade, things of that nature. Go into a little bit in the bootcamp, but this is how you identify a candle. So a candle has wicks on both ends. Usually, almost every candle in the chart is going to have wicks on both ends. When it doesn't have a wick, that is what I call a wick fill. That's something too advanced. I'm not going to teach you guys here in the free content because it's going to confuse you too much. Just assume majority of candles will have wicks on both ends. And in a bearish candle or even a bullish candle, the wicks are also going to be highs and the bottom ones are going to be lows. Now, there are different time frames on your chart. You can see on my time frame, top left, there's 5 seconds, 15 seconds, 30 seconds, 1 minute, 5, 15, 30, 1 hour, 4 hour daily. There's so many time frames. There's even ticks, but I'm not going to talk about ticks in the bootcamp because I don't trade ticks. I trade time intervals. So you can see there's so many time intervals to use. Don't use ranges either. I'm just using time. Each of these candlesticks represent time. So if you're on the 1 minute chart, that means every candle is 1 minute of price action. When I say candle, that also means bar. Every candle on your chart is 1 minute of price action. Every candle on your chart represents 1 minute of price action. Okay. If we're on the 5-minute chart, every candle is what? Representing 5 minutes of price action. 5 minutes of price action. What does this really mean though? This means, well, this 5-minute candle here represents during the 5 minutes. So let's say it is 7 o'clock, as you can see, and let's go to 7:05. That means from 7 to 7:05 when this candle closes, because every candle has to close. It's a time interval based chart. So if you're on the 5-minute, the candle that you see, there's going to be a timer on TradingView on the right side. Let me see if I can show you an example real quick. You see on the right here, there's a timer countdown. So each candle takes 5 minutes to close. And so once the candle closes, the candle high represents the highest price point, that the asset reached. The low, which is the bottom of the wick, represents the lowest price that the asset reached during that 5 minutes. The opening is always, okay, the opening of the candle is always going to be the closing of the previous candle. So you will have a candle here, and let's say, here, let's move this here so it's probably more understandable here. So this is the closing of the bullish candle right here. So let's say this was 6:55 to 7, and let's say this candle is 7 to 7:05. The opening candle of this candle right here, number 2, is gonna be the same price as the closing of the previous candle, because the thing about this, the previous candle during this 5 minutes of price action, this is what this candle did. We opened down here, price started moving, made a high, made a low, and then it closed. Price stopped. So on like something on the seconds or maybe 1 minute chart, it might look like this. And then we close. This is the low being made here. This is the high being made here. This is the closing price. This is the opening price. You see how this is a representation of price, was what price is doing on a lower time frame right here. This is just a 5 minute candle, but if you convert that, this is probably like a 1 minute or 30 seconds or even 15-second chart. This is what it's doing. Price is trading, creating the high, low, opening, and close. Now, this is going to be important for certain things we will discuss later, so make sure you know how to read closures, the candle closure. That's going to be extremely important, actually. But just generally understand this is how candles work, this is how price works. All right, high, low, close, open. Now, usually there's a concept called open, high, low, close, and open, low, high, close. You might have heard this before, but if you're brand new, you've probably never heard of this before. In a bullish scenario, we're going to have open, low, high, close. Usually, what does this mean? Price is going to open up, we're going to make the low, make the high, and we're going to close. Open, low, high, close. This is a bullish scenario. So you see this is fractally what this 5 minute candle looks like maybe on the 1 minute or 30 seconds. And usually for a bearish candle, we do open, high, low, close. Which means we are going to be, price is going to open, we're going to make the high, we're going to make the low, and then we're going to close. So same understanding here, right? Open, high. When you see high, like it's the same meaning as this high here. This is just on a different time frame, lower time frame usually, and it close. So this is a typical pattern price tends to deviate towards when we have a bullish candle, which is open, high, low, high, close, versus a bearish candle, which is open, high, low, close. You may be wondering, why is this the case? This is typically the case because of mitigation. That's something too advanced I'm not going to talk about in today's video, but essentially, to keep it simple, price is going down to either take out people that are trying to buy or fill orders. So think about it this way. In an auction, people want to buy low, right? So the market is basically facilitating orders in trade. It's going lower to get buy orders to then go higher. If we're trying to go to the downside, a bearish candle, price has to go up to collect sell orders. People are trying to sell high at high prices, just like in any market. It doesn't have to be trading, any type of market, any industry. People want to sell at high prices. Price is going to trade towards a higher price point, premium, go down, which is what I call discount, and close. And its close is also going to be bearish. So like if this opens here, the close is going to be down here. It has to be below. So for example, this has to obviously be closing above. Hopefully you guys understand this. You can take a screenshot, feel free to. This is what open, low, high, close, and open, low, high, close, open, high, low, close means on a candlestick and how you can read candles. When we have a bearish candle, what determines candle color? Depending on how your trading view settings are set, usually by default, if the current closing price is below the previous closing price, we should be printing a bearish candle. If the previous candle closing price is, or new candle's closing price is above the previous candle closing price, it's going to print a bullish candle, if that makes any sense, right? Like it's going to be a bullish candle, oh, whoa. Like if we're going to the downside, it's also going to be printing a bearish candle. So you see this is the body of the candle. If the body exceeds the previous body, it should be bearish. If it doesn't exceed the previous body and it goes to the upside, this is going to be a green candle, bullish. So this is basically the gist of how you read a candle. One last thing to really just understand is these are called wicks, the lines on both ends. The body is, the rectangle that you see on your chart. So let's go to your real chart and show you guys a quick example of this. This is the high of this 5-minute candle. This is the low of this 5-minute candle. On TradingView, if you hold the shortcut control, you can use it as like a short-term magnet and magnetize. Hold shift on your keyboard. You can make it very straight and at 45-degree angles. Bring it out. Bring it out. This is the high of this 5-minute candle. This is the low of this 5-minute candle. Let me show you guys something cooler. You mark this 5-minute candle. We go back in time. Look at this. On this 5-minute candle, you can clearly see if you go to the 1 minute, this is what the 1 minute looks like, right? This 5-minute candle now converts to 5 1-minute candles. But overall, if you're on the 5-minute, you don't see as much detail. So usually in trading, the lower time frame you deviate towards or change to, the more detail you will see. But with more detail also means there's going to be more noise. So that's why whenever you're trading, you go from a higher time frame narrative down to a lower time frame narrative. So you build your way down from the higher time frame. If that makes sense. So like if I'm on the charts today, I'm looking at 1 hour candles. This is 1 hour of price action from 4 to 5. This is the high of the 1 hour candle. This is the low of the 1 hour candle. Where is the body? This rectangle here is the body of the candle. This is the wick. This is the wick. So whenever you guys hear people say wicks of the candle, this is the lines, vertical lines. Whenever you hear body, they're referring to the rectangle. Easiest, simplest way to be able to basically read a candlestick chart. So I hope you guys now do understand and get a rough understanding of basically how candlestick pricing works and how you can read them. And as you can see, here's one last thing to talk about. You can see, obviously, if we're bearish, meaning going down, you tend to see a lot more bearish candles. Now, my chart is not green and red. If you're a beginner, I recommend you change it immediately, just because I recommend, because psychology reasons, if the chart is red, you're going to be more fearful. If the chart is green, you're going to be more greedy. Change your chart colors to something more monotone or cool, like blue and black or black and white, whatever, looks good to you. As long as it's not green and red, you should be fine. But it doesn't mean you have to. This is just a psychology tip, because later on in the bootcamp, you'll realize psychology is going to be 100% of your trading once you get to a certain stage, which is what I'm currently at. So yeah, hopefully you guys do enjoy today's video. And in the next episode, we're going to be talking about trend.